like the values that you bring to investing will get magnified in your investments, and they'll get magnified in your life, and it changes everything. It really makes you a different person.
Yeah.
I think in a lot of ways, it makes you a better citizen and a better person.
It's, what you put your focus on grows, and it's transformative. It was for me to put my focus on companies with great integrity, creating great products and services, and it changed the way I think about where I put my money in all sorts of contexts. So Oliver's question is, cash is trash, guys. What the heck? Basically. And hearing Ray Dalio say that inflation is coming, Ray Dalio is not the only one who's been saying that. We've all been hearing it. And just wondering what to do when the advice is don't buy bonds. He doesn't think he has enough money to buy gold. And stocks are at all-time highs by most metrics. So considering that interest rates are insanely low, and until that changes, one could probably expect the market to keep going up, what to do? And I think it's a great question. What to do when the market's up, you don't really see any other options, and you're holding cash, right? And cash may not hold its value, is what he's asking.
Oh, cash will not hold its value. And that has been a problem now for, 40 years, easily 40 years. And you could really make a good case that it's been a problem since 1935, when the United States started devaluing the dollar. And it's been an unrelenting devaluation ever since. We've talked about that a little bit already. So I think it's instructive to kind of just look back and see, what did Buffett do? You know, we got a little bracelet, WWB. And we look and see what happened.
And it has to be a bracelet made by Borsheim's jewelry store.
There you go.
If they don't make that, they're missing out on a branding opportunity.
I just discovered something. I'm honestly, now this is after me being a total fan of this guy for 40 some years, and I'm rereading the letters. Okay, rereading.
Yeah.
And every time I reread these letters, and yes, you are too. It's super good. I always get something new out of it. And one of the things I got out of this was that Borsheim's, you know, Mrs. B? Mm-hmm. Mrs. B with the Furniture Mart?
Yeah.
Okay, that's her daughter's business, Borsheim's.
Oh, I haven't made it to that letter.
Her son-in-law got into the jewelry business. And Buffett said, you know, why not you can't make too much of a good thing, right? So he loves the family, loves the work ethic, and that family, I don't know if you've been into Borsheim's. We went in it together. Mm-hmm. And it's the most different jewelry store I've ever been in. It's phenomenally interesting to me. I mean, they pull out, maybe it was just because it was during the Berkshire meeting, but God, I mean, they got stuff. They got a lot of stuff, a huge inventory, which is one of the secrets, by the way, of both the Borsheim and the Furniture Mart, is that they have gigantic inventory. They tell the truth about it, and they keep their prices lower than anybody in the country. And they just have one store. That's it. Come to us. We're not coming to you. So
yeah, I think the reason they had all that stuff out was because it was Berkshire. And
probably so.
I wonder. It'd be interesting to go in there actually not during that weekend and
we'll
see if it is really different. And if they really have sales during the Berkshire weekend or not. I'm sure they do. Integrity, remember? Integrity. You can't say, it's like TJ Maxx always, or TJ, what's it called in the UK? TJ, I don't know, I forget. Anyway, it's called something similar in the UK. Discount stores. They always say like 25% down from, original price, but then they lie about the original price and work it
Lovely.
out.
So
cash is trash.
Coming back to Oliver, cash is trash. All right. And yet Warren Buffett today, we know, has over $150 billion in cash. So this seems contradictory. And it is to a certain degree, because Buffett also says he never tries to predict the market, has no idea, never will try to predict the market, where it's going and all this, which I find a little bit disingenuous, because he's been extremely good at predicting the market more than once by having a lot of money in cash when the market crumbles. And so I think it's not trying to predict the market so much as just not being able to find great companies.
Yeah.
at a great price.
I think those
And
things look the same.
yeah, they look the same. But what Oliver's asking is something we can actually find out about. What did Buffett do in other times when he's just been massively in cash? And there's he writes about it, I thought in the 1987 letter, but it might have been 86 or something, right in that time period. I haven't had a chance to go back and find it. But he talks about how how he basically invests in stocks, bonds, and he hasn't talked about bonds in a lot of years, but back then, stocks, bonds, and what he called workouts, or in other words, or arbitrage. He basically got around to calling it arbitrage. And his view was, in that time period, he doesn't really care which one it is. They're just going to go to the one that offers the best deal. I want you to remember, 1987, bond returns in some cases were 15 to 17% a year in relatively low-risk bonds. In fact, the U.S. government 30-year Treasury bond hit 15% per year back in the mid-'80s. And at that point in time, good investors like Buffett were pretty much neutral on whether they wanted to be in the market or wanted to be in bonds. If they got a good deal on a corporate bond, they bought it.
So much, much, much higher return than right now. Is what you're saying.
Yeah.
Like by 15 times, basically.
Oh, gigantically better returns. Right now, you can't really go to bonds, and no one would encourage you to do so because they're very unlikely to go down further, although that can happen. They can go negative, but not a lot further. And very likely that they'll start.
How does that inform what he does with cash?
Okay, so remember now, there's basically these three places to put money: stocks, bonds. Well, cash would be the fourth. So stocks, bonds, or arbitrage. And Buffett described arbitrage as being a perfectly useful place to put the money when you have an edge. And the kind of arbitrage he was talking about is when company A decides to buy company B and form a merger. And what happens often is that company A will offer, let's just say the example he was using is $37 per share to the owners of company B. Okay, I think this is kind of how it works. So basically company B is going to sell for $37 a share, being offered by company A, and company B at that moment is selling for $33 a share.
Mm-hmm.
Now, the reason company B doesn't immediately go upon the approval of this deal by the board from $33 to $37 is because there is a catch. And the catch is government approval hasn't happened yet. The government can get involved here and claim monopoly problems and whatever. So there's issues, and the shareholders haven't yet completely gone along with the deal. So there's issues that could derail the deal. So there's a spread. A spread is the price differential between the price that company A is going to pay and that company B is selling for today. And that spread, if you buy company B and hold it, eventually, if you're right, it'll sell for $37. And that spread right there, that $4 spread, is an arbitrage. It's basically a time and deal arbitrage. Effectively saying there's no reason this shouldn't go to 37. It's going to go through. Mm-hmm. And you're going to make $4 on it. Well, that doesn't sound like a lot, right, on a $33 investment. But then time comes in as a factor. So, okay, how much time before this all happens? And the answer might be 3 months, in which case that little 11% return just became 33% compounded on an annualized basis. You see what I'm saying?
I do.
And Buffett would load money into these deals. He would pile money in when he found them. And so he would do it when he found them if he had an edge. And the edge would be understanding these two companies well enough and understanding what the approval process looked like well enough that you could make a reasonable estimate of probability of the deal going through. You guys, if you enjoyed this video and you feel it was valuable in teaching you more about how to invest, hit the like button and please share the video with your friends. And if you want more investing content, subscribe to my channel. And don't forget to click the button on the screen. We got a free gift for you. Thanks again for watching.